Gold is surging, and it's not just because of inflation. Something much deeper is driving this move. Central banks are buying at record levels. Major institutions are increasing allocations. And while retail investors are still distracted by stocks and crypto, the oldest asset in human history is quietly reasserting itself as the foundation of global wealth. In just the last year, gold has broken through key resistance levels and is now hovering near all-time highs. But here's what most people don't realize. This isn't a short-term trade. It's a signal. A signal that the global financial system is entering a phase of extreme transition. Let's start with the central banks. In 2022 and 2023, global central banks purchased more gold than any time in the last 55 years. Countries like China, Turkey, and India are leading the charge. But even Western nations are quietly adding to their reserves. Why? Because they know something the average investor doesn't. They know that trust in fiat currency is evaporating. And when trust fades, gold rises. Gold is not just a hedge against inflation. It's a hedge against systemic failure. When bonds collapse, currencies devalue, and financial systems wobble, gold doesn't flinch. That's why central banks are rotating into it, not because it yields interest, but because it holds weight, literally and figuratively. But the story doesn't stop there. What's happening behind the scenes is even more revealing. Countries are using gold to settle trade outside of the U.S. Dollar. Bilateral trade agreements between BRICS nations are being backed by gold reserves. Russia and China are exploring settlement rails that bypass the SWIFT system entirely. And gold is the bridge asset that makes it all work. This isn't speculation. It's confirmation. The U.S. dollar's role as the global reserve currency is being challenged in real time. And gold is at the center of that challenge. For decades, the dollar was backed by nothing but trust. Trust in the U.S. government, in the military, in the debt markets. But after weaponizing the dollar through sanctions, freezing foreign reserves, and printing trillions of new units, that trust is fading fast. Enter gold, the ultimate neutral reserve asset. No counterparty risk, no central authority, no reliance on digital infrastructure. In a world of programmable money and central bank digital currencies, gold offers a form of value that can't be shut off with a keystroke. Now here's the twist. While the mainstream media is focused on the price of gold in dollars, the real players are focused on the function of gold in the next financial system. They're not just buying bars, they're redesigning the plumbing of global finance to include gold as a key component. That includes tokenized gold on blockchain rails, settlement systems where gold backs digital units, and even whispers of a BRICS-backed gold currency. Meanwhile, the average investor is missing the signal entirely. They're still chasing tech stocks, hoping for another bull run. They're still watching CPI numbers as they reflect real inflation. And they're still treating gold like an outdated relic, instead of what it truly is, a monetary asset built to survive collapse. Here's the reality. Every time the world has experienced a major monetary reset, gold has played a central role. After World War II, the Bretton Woods Agreement pegged currencies to gold. In the 1970s, when that system broke down, gold exploded in price. And now, as the fiat experiment reaches its breaking point, gold is positioning for another breakout, not just in price, but in relevance. The surge we're seeing now is not just about fear. It's about positioning. Smart money is getting ahead of the next system. A system where gold sits alongside digital currencies, tokenized assets, and blockchain infrastructure. Not as a competitor, but as a stabilizer. Imagine a future where a nation's digital currency is backed by tokenized gold. Where international trade settles in real time using blockchain, but with gold as the final clearing layer. That system is already being tested. And once it reaches scale, the old model collapses instantly. So what should you do? First, understand that gold is not just a defensive play, it's an offensive one. It protects well, but it also positions you for the upside when the reset occurs. Whether that reset is slow and managed or fast and chaotic, gold wins in both cases. Second, consider the ways you can gain exposure. Physical gold, tokenized gold, gold mining equities, ETFs. Allocation isn't about putting all your capital into one asset. It's about being diversified across systems. If you only own assets that depend on the current fiat model, you're exposed. Period. Third, pay attention to what the institutions are doing, not what they're saying. When BlackRock increases exposure to gold, when sovereign wealth funds load up on bullion, when central banks buy quietly while dismissing it publicly, that's the real signal. And finally, zoom out. We're not just living through market volatility, we're living through a monetary revolution. Fiat is being redefined. Debt is unsustainable. Digital systems are rising, and gold is becoming the neutral pillar that supports the transition. That's why it's surging. That's why it matters. And that's why you need to stop watching the price and start watching the infrastructure. Because what's coming next won't be a trend. It will be a transformation. This also explains why digital gold is becoming such a powerful concept. Platforms like Paxos and Tether Gold are allowing people to hold tokenized gold that is fully backed by physical reserves. These assets offer the stability of gold with the speed and utility of digital currencies. In other words, they combine the best of both worlds, and they're gaining traction fast. Institutions love this model. It gives them exposure to a time-tested asset without the friction of storage and transport. And as regulatory clarity improves, tokenized commodities like gold are going to explode in demand. Because in an uncertain world, everyone wants three things: liquidity, stability, and sovereignty. Tokenized gold delivers all three. This trend is also tied to a deeper shift in mindset. For years, people thought financial innovation meant creating new layers of complexity: derivatives, ETFs, structured products. But now, innovation is taking a different form. It's about simplifying the foundation, returning to assets with intrinsic value, and reimagining how they move. This is why tokenization matters. It takes the stability of physical gold and adds the flexibility of blockchain rails. That combination is a game changer. It allows gold to move at the speed of information without losing the permanence that made it valuable in the first place. It's also why central banks aren't just buying gold. They're talking about digitizing it, turning it into programmable value. The Bank for International Settlements has released papers on tokenized assets. The IMF is exploring hybrid monetary systems, and private institutions are quietly building the back-end infrastructure to make it all work. When these systems go live, it won't be with fireworks. It'll be quiet, seamless, and global. One day, you'll hear that a trade was settled in tokenized gold. Then another. Then a major payment network will add it. And suddenly the shift will feel inevitable. That's how paradigm shifts happen. Not all at once, but faster than anyone expects. So don't get distracted by the noise. Gold is not an old story. It's the next chapter. The bridge between what the system was and what it's becoming. The question is whether you'll be part of that bridge or left standing on the wrong side when the dust settles. Because in a world of algorithmic decisions, fragile trust, and engineered volatility, gold remains what it's always been: the last line of truth, the final fallback. If you want to stay ahead of this shift and position yourself before the financial reset becomes reality, subscribe now. This is Wealth Signal, and the signal is clear.